Are you trying to ring me for anything exciting?
Yeah, I was going to tell you to potentially work from home.
Oh, you should answer.
Yeah,
I can do
but it
that.
didn't ring.
I can do that on Monday if you want.
It didn't ring at all.
Hello and welcome to LET's weekly market insights. Overnight, we've seen dramatic moves in the markets as the new South African COVID variant sends a shockwave through the markets. The WHO will hold a conference at midday today to analyse the new variant, but concerns revolve around the rapid spread we've seen in South Africa's provinces from the start of November and the sheer number of variants, currently up to 32. We're seeing dramatic moves across all asset classes, but just be mindful, thinner liquidity conditions due to Thanksgiving and the US being out of action may be exacerbating some of these moves. As we look at these charts, we can see the bond market is arguably the key spot to watch as yields are dragged down heavily. The 2-year Treasury yield is down by near 7 basis points on the day, and we can see the bond market here rallying away now from this key support level, breaking through previous highs before just taking a little pause and a breather now. But a big move higher here in these bond markets. Now, amid the retreat in bond yields, yen pairs are dragged down heavily. We've seen the Aussie yen down 1.3%, while the dollar yen is down 0.6%. We can see here Aussie yen, the bottom right of my screen, selling off aggressively from this strong resistance level. Now, this level was of interest to us anyway due to the nature of the sell-off previously seen here, but now breaking down through the lows before finding a little bit of a support down at this 81 handle. It's a similar story as we come through the commodity markets. Oil down 6%, dipping into $73 a barrel. The sell-off again, very similar story to as we've seen here in Aussie yen. This key level of interest, previous strong selling, holding firm over the past couple of days before this acting as the catalyst to see market moves move lower. Biden may get his wish this Christmas. He's been hoping for a weaker oil price. Now, this has been the catalyst. It'll be interesting to see as we come now towards year end the impact this is going to have on the OPEC Plus meeting next week, and if that changes their stance and changes their tone. At the moment, expectations were pre this release were for OPEC Plus to potentially pause their plan to pump more oil. Certainly, this reduction in price is going to strengthen that opinion, increasing the chances for OPEC Plus may pause their oil production to try and build and boost the price of oil once again. As we come down to the indice markets, we can see the DAX here, again, similar story to the risk currencies, the commodity currencies, and the commodities themselves, aggressively moving lower here with DAX selling away from that 16,000 round number, testing before now moving lower towards this monthly pivot point and the previous low that we can see being tested right the way down through here. We can mark it up on the chart, holding that level for the time being, but a long way to go. The reaction here, as I said, I'll reiterate again, be mindful that thinner liquidity conditions may have exacerbated these moves, and that will make it vulnerable for potential bounce backs. Certainly as we come through to that midday meeting with the WHO, and we will look for further signs of what are the real implications of this variant and how severe really is it. All eyes towards that for the market. For now, we are risk off in the markets, looking for opportunities to be short in these risk currencies, indice markets, and potentially long within the bonds sector. Be careful coming now through into the weekend. Be careful of that increase in volatility and low liquidity. Also be mindful of the change in trading hours around the Thanksgiving holidays. All the best with your trading. Good luck. Please do join us same time next week for another weekly market insights.